right, there's a lot of people out there saying that this week was a really tough week. We had federal news folders that weren't being released. We had massive drop-offs in crypto, and we had a huge, massive sell-off on Friday, which in my opinion was completely normal. So let's have a look, and let's prove once again that even in one of the roughest weeks, you can still pull major profit out if you trade this ICT concept. YM US 30. This is just doing it by the book exactly. Let's have a look. Here we have Monday, as you can see at the bottom of my screen, the 6th of October. So I'm going to walk you through this on the 1 minute. I have another screen going where I've marked all the stuff in on my other monitor. I've marked in all the major key points of session liquidity and high time frame for value gaps. In this run on Monday, we had this continuous drop down, as you can see, right into here. And we fell into the macro roughly right here. So we've come into a 1 hour bullish fair value gap. And this red line here is session liquidity, Asia, no extreme. What does that mean? That means that it is not a major low or major high external. It is just part of the session liquidity. Okay, so in that case, because it's Monday, because we have no red folder, I believe, that day, we're going to enter in at half position. So what we have for confirmational bias is we have this 1 hour bullish fair value gap. Okay. Then we have a clear of session liquidity, but it's weak. But the third thing that allows us to want to get in is, I've marked all these in, the daily 50% is right here of the previous range. So if we're in Friday, this is Monday. So we have a buy right here. Smart money buys in the discount, right, of the previous daily range. So we look for confirmation. We're in a macro. You can see that this is the breaker block right here that I have marked in, and we have displacement over the breaker. I'm going to zoom in and make sure that everybody can really see that. We can see we have this breaker block right here, and we've displaced through it with this candle right here. Why is that the breaker? Look at all the lows. Low, low, lower low, right? Lower low right here. Change character. We have a breaker block, a new high. It's all it takes is a little wick like that. That created this low right here. Okay. We have fair value gap that displaces through it. Our entry, in this case, at half risk, because we've gone over a Y, long position is right here. You want to take your stop loss and you want to put it below that candle. You can put it below the breaker block slightly right here, and I would do it by a point or two. So in this case here, I'm going to go with a 32 point stop, because if this is going to hold up, if this is going to be a good run, then we're going to expect this bullish gap right here to hold up. And where your target is going to be is on the 1 hour. I target the medium, the 50% of this entire range all the way down. You just gambox it out, or you can see in this case, we have a 1 hour fair value gap. Let's not be greedy. Let's put it right on the edge. It's a Monday. There's no red folder. We don't need to target the highs up here. We're going to target the 50%. Watch how this works out. We have the 50% right here, and how we have it dipping in right here, just above the 50, perfectly for securing 169 points. All right. That is a very nice trade. It's a Monday. We don't need to take that any further. Here's the open on Tuesday. We make this huge drop right here. We're not in a macro here till down here. So it dropped down into here, and we crept below the daily 50%. That's huge. So we're looking for buys below here, and we're waiting for a sweep of liquidity. The London lows are right here. You can see here, we swept them. We have no displacement. We have no entry here. Then comes back into that same 1 hour fair value gap from Monday. And you can see there is a move right here, but we are out of macro, and I did not trade. We have displacement over this breaker right here, and we tap into it, and we're gone. So we have no trades for Tuesday. All right, here we go into Wednesday here. I want to make a note that this arrow here is 1 hour inversion. So right here at this point, I marked it on the 1 hour. This is where it inverted a 1 hour bullish candle right here. I mark all my inversions in. So as we get into the opening right here, you can see the open starts right here, and then it just collapses at the open and comes all the way back down once again for the third time into this 1 hour bullish gap right here. This came up in the first AM macro here and took off, and this leaves me with no valid entry here. So you can see no matter what, you got crushed. It's also filling fair value gaps in the opposite direction, which I do not like. And then what we had over here was, this is the breaker block way up in here. And you can see that right in macro, it just at the end of it, it breaks it right here. However, it's a very risky trade. I wrote half risk because what we have is this is the displacement here over the mitigation block, and we have displacement through it here. And this is the 50% of this range, the same way I scale in, watch the low to the high. I'm looking for PD array below the 50 right here. The odds of this thing coming from here and back into these fair value gaps right here are very great. But I don't care at half risk. The only decision that made me take this trade was we were below the daily 50% of the range. And you can see here, you would target the first fair value gap or the highs right here. In this case, it's obvious it's going into this 4 hour bearish gap right here. So I have Wednesday's trade marked down for 134. Here we are, folks, on Thursday. You can see that we're just leaving the daily 50%. It's sweeping liquidity. We swept London right here at 230, and we had this sweep of internal right here. And the problem with this trade here is that it displaced over the mitigation block right here, making a temporary high here, displacing over it. However, price did return into it, but I don't take them off the mitigation block like that. I only do those trades off the breaker. And the breaker in this case isn't till down here. So being the breaker block down here, we displace through it right here, but price never returns and just takes off. This market then comes down and inverts this 1 hour fair value gap, I think at 7 o'clock, somewhere down here. So I was waiting for a return into this fair value gap. In the fair value gap, as you can see, price never returns to it. Once we trade below the daily previous low, we're not looking for buys anymore. So again, no trades on Thursday as well. I was looking to get in on the inversion like I had mentioned. I was waiting for the price to return to this 1 hour fair value gap. This is where it's being created, right? So it never goes into it. And that's my bread and butter when it does that. I take these cross at the 50 and the 20 when it does that. And it's a continuation model type flow. Doesn't need to necessarily take liquidity out. But as you can see, moving on to the 1 hour on that trade for Thursday, you can see price inverts this at 7 a.m. right here. And what it's doing is it's inverting this bullish gap back here that's held the price up for the entire week. It inverts it right here. So the next obvious low is this low right here. Here's the bullish gap that formed right in here. So this would be the low of that range where the bullish gap is in right here. And you can see that when it inverts it, the price definitely has a target of that low because it inverts this bullish gap right in here. So I was waiting for the price to return to this fair value gap inside here. It's doing the same thing as we look for on the 1 minute, guys. Price is fractal. This candle is displacing over the mitigation block right here. It's breaking the breaker block. It's displacing and it's inverting this 1 hour bullish at the exact same time. It's just that in this case here, price never returns. It just goes right to the target immediately. So you either react off the target itself or you react off of the inversion gap itself, the fair value gap right in here. And you can see this is the end of the day in Asia when it does it. Price comes down and sweeps this daily previous low right here. And what it does is it puts out this fake move right here. So we have a breaker block. We have a displacement through it here, a fair value gap here, and price ran down, ran above it, made a new high, and then came down and pretty much took your stop loss out. The reason why, I mean, this is where I take all my buys, is right here. We're also below the daily 50%, which is up here. So this is actually a really juicy buy right here. And we could almost mark this as a negative 25, negative 30. The reason why that I didn't take it was because of, for what I teach all the time, we inverted this bearish gap right here at 7 a.m. So that means the algorithm wants to reprice itself lower. And what does it do? It comes all the way down and takes that low right here of that range of the 1 hour inversion right here. So there is no trade on Wednesday, or sorry, this is Thursday. So here we have Friday. We are above the weekly 50%. We're in that discount. Sorry, we're in that premium range. We have this major sell-off that happened, and you can see price came into this 4-hour bearish fair value gap right here. And it's also a 1 hour, which extends higher, and it comes to a stop right here. I had price perhaps being bullish that day, but we had not returned to the weekly 50 yet, which was a good sign. So you have bearish confluence. We're trading above the daily and the weekly. The only problem with this trade here, well, there's actually two things, is that the daily previous high is right here. And then we just don't have a trade in macro because it never returns to any of these fair value gaps right here until 724. And then that is it. This thing just drops off. And all the crypto guys, like, you shouldn't be all lost because they didn't know how to leverage and how to trade things that run on the algorithm as opposed to trading random crypto stuff that should be your investment, right? You can see that smart money made a very deep retracement into the 50% of the range right here, down in here, right? So there was no trade for Friday, securing 169 points on Monday at half leverage and 134 points on Wednesday, securing a total of 303 points for the week. If anyone's interested in doing back testing with me, let me know. I do them live on calls as well. And have a great day. Talk to you soon, guys.